Welcome, tech enthusiasts, to the Monday edition of Tech Stocks Daily. Get ready for a roller coaster of tech tempest and investment intrigue. First up, we dive into Apple's unexpected tariff tango. Will iPhones get pricier, or is it just political chess at play? Then, zoom into the skyrocketing saga of Dave Inc., the fintech phenom that's sending investors hearts aflutter with stunning stock leaps and rosy forecasts. And finally, spotlight TIMB's commanding value conquest, trampling its competitors with tantalizing financial metrics. It's a cocktail of controversy, triumph, and tantalizing prospects. Stay tuned. Apple is grabbing headlines today, and it's not just because of the usual product buzz. The tech giant is in the spotlight thanks to potential tariff-induced price hikes and some political maneuvering aimed squarely at its operations. Are we seeing iTariff gate? Maybe not quite, but the discussion is definitely juicy for investors and industry watchers alike. Let's start with the first piece of news, the potential iPhone price hike due to tariffs being tossed around like confetti by the Trump administration. Samik Chatterjee from JP Morgan believes Apple is well-positioned to handle this cost shock, despite threats of a 25% tariff on iPhones made abroad. Now, if you think a 25% price spike sounds like enough to make Tim Cook's coffee fly halfway across the boardroom, hold on. All smartphone manufacturers could be affected, which means even the competition splits are being fried in the same vat of tariff oil. Thanks to the strength of its brand and rock-solid customer loyalty, Apple is seemingly better cushioned, relatively speaking, compared to other brands. Chatterjee's calculations indicate that even if tariffs lead to a $50 increase per iPhone, this wouldn't be the end of an era. It's a tricky maneuver to shift the manufacturing back onshore to the US, given that it would likely jack up costs, about a 30% increase in input costs. But wait, we have a plot twist. According to Ming-Chi Kuo from TF Securities, President Trump's targeting of Apple is a strategic play for maximum exposure and political clout. We're talking big-time chess strategy here, folks. By pressuring a hallmark of capitalist glitz like Apple, Trump ensures he's grabbing the spotlight. The famed Made in America narrative is catnip for headlines and delivers political currency on a gold platter. This is essentially political stratego, with Trump seemingly having nothing to lose and everything to gain from the tension. Kuo suggests that Apple is unlikely to lash out in public. They're more likely backstage diplomats, avoiding frontal confrontations. Whether Apple opts to swerve with a shuffle of cables or negotiate a tariff truce, there's benefit for Trump. If Apple does relocate iPhone assembly to the US, it's banner day stuff. If not, well, the tariffs are Trump's leverage trotters. The markets, of course, have reacted like they've had a strong espresso. Apple stocks tripped down by about 3.02% during the day's feast of information, but shook off some of the sound and fury by perking up 0.30% in after-hours trading. It's the financial equivalent of a cliffhanger ending, keeping investors not just watching, but blinking back amazement. When you stitch together all these threads, it feels like Apple's navigating a whirlwind of business acumen, diplomatic patience, and a touch of political charades. Whether you'd call it top-tier Apple agility or just another day at the tech policy interface, one thing's for sure, Apple is once again the talk of the tech-savvy town. Hey tech fans, let's dive into today's hot topic, Dave Inc. This company has been making headlines, and for good reason. If you're following the stock market, you'd know that Dave Inc. is currently causing quite the buzz, especially if NASDAQ is your go-to resource for all things tech. So why is Dave Inc. in the spotlight today? Simple. This fintech company is looking like a potential rocket ship of a stock ready for takeoff. Recently, the company's earnings outlook has improved significantly, which has got analysts raising their earnings estimates left, right, and center. It's like watching a well-caffeinated weather forecaster happily telling you it'll be sunny forever. First off, let's talk about the numbers. Dave Inc. stock has skyrocketed by about 112.3% in the last 4 weeks. Quick math, people, that's a lot. They've also reached a new 52-week high at 201.45 cents. Whether you've been holding shares or just keeping an eye on them, it's hard to ignore such stunning upward movement. Now on to the nitty-gritty stats. Analysts are predicting a strong performance as the company is expected to earn $8.41 per share for this fiscal year, which is a 60.5% bump from last year. Looking into next year, projections show earnings per share going to $10.68 and revenues climbing up to $577.3 million, showing promising growth in both areas. It's like turning lemonade into Dom Perignon. One of the prime reasons for this optimism is the trend in estimate revisions. Analysts haven't kept this optimism to themselves. They're all shouting it from their metaphorical rooftops. These revised estimates are currently pushing the stock higher. Because let's face it, the stock market loves good vibes and positivity more than your favorite weekend brunch spot. But what about its Zacks Rank, you ask? Dave Inc. is sitting pretty at a Zacks Rank of number 1, dubbed Strong Buy. This rank is blessed with empirical vigor, statistically translating into excellent returns over time. For those unaware, Zacks Rank number 1 stocks have historically yielded solid returns averaging 25% annually since 2008. Sounds like the kind of math your investment portfolio could use, doesn't it? And yes, while they might be cruising near their 52-week high, experts suggest there still might be room for growth. Analysts often say, don't let a high point scare you off when there seems to be more gas left in the tank. So if you're the gung-ho type looking to diversify your portfolio, Dave Inc. might just be your golden ticket. In summary, Dave Inc. is stealing the tech show today because it's mixing financial performance, promising forecasts, and analyst dream votes into one tantalizing package. Keep your eyes on this one. It might just make your portfolio dance. Today, all eyes are on TIMB SA sponsored ADR as it emerges as a standout performer among wireless non-US sector stocks. The market's buzzing with the comparison between TIMB and its peer, TeliaSonera AB, and it seems TIMB is taking the lead in the hearts of value investors everywhere. First off, let's talk about its Zacks Rank. TIMB is flashing a solid number 2 rating thanks to an improving earnings outlook and positive revisions to earnings estimates. In simpler terms, the financial gurus are pretty optimistic about TIMB's money-making potential, at least for now. While TLSNY has to settle for a Zacks Rank number 3, TIMB's more favorable ranking sets a positive tone for potential investors. One of the big highlights for TIMB is its superior valuation metrics. Let's break this down. TIMB currently boasts a forward PE ratio of 12.70, whereas TeliaSonera clocks in at a heftier 24.41. Lower PE ratios are attractive in the investing world because they indicate you might be snagging those shares at a bargain. On top of this, TIMB has a PEG ratio of 0.79, which is pretty snazzy. This ratio not only takes a peek at the company's valuation, but also sneaks a peek into expected earnings growth. On the other side, TLY stands at a 4.73 PEG ratio, not exactly as flattering. Another feather in TIMB's cap is its PB ratio of 1.97, meaning you're paying less for what the company physically owns if you add up all its stuff. TLSNY, on the contrary, has a PB ratio of 2.75, so TIMB wins again with investors hungry for value. It's precisely these metrics that lend TIMB its value grade of A compared to TLSNY's C. For all the numbers lovers out there, that basically means TIMB gives you more bang for your buck in today's market. For those looking to fortify their portfolios with robust value options, TIMB appears to be leading the charge. Here's the big question we're buzzing about. Is TIMB truly the best value investment right now? Do you think its strong numbers will lead to strong returns? Or are there underlying issues that could upset its current promising position? What key metrics do you look at when picking stocks? I'd love to hear your thoughts on this comparison. Hit that comment section and let's get the discussion going. Your insights and opinions would be immensely valuable for our little tech community. All right, tech fans, let's dive into the spotlight and focus on Apple for a bit. So with today's news swirling around tariffs, iPhone pricing shenanigans, and political chess games, you might be pondering buy, sell, or hold. Here's where it gets juicy. The concern over a potential 25% tariff hitting iPhones made abroad is certainly enough to give any investor pause. If these tariffs get the green light, there's talk of about a $50 hike per iPhone. Although that sounds pricey, Apple seems poised to handle it, thanks to its robust customer loyalty and that steadfast brand magic. Plus, remember, all smartphone players spinning in this tariff conundrum are on the same racetrack of doom, meaning competition isn't escaping unscathed either. On the political side, President Trump's spotlight on Apple as part of his Made in America narrative is both a pressure cooker and marketing gold. Whether Apple relents and brings more manufacturing stateside or just doubles down on diplomatic tight-roping, it stands as an intriguing narrative arc for investors. What's the financial takeaway then? Apple saw its stocks creak downwards by about 3% during day trading, but bounced back with a smidgen, up 0.30% in those after-hours updates. The suspense is real, folks. So if you ask me, I'm leaning towards holding Apple stock at this juncture. Why? If you were already on the Apple train, these momentary whirls are part and parcel of the broader, longer-term tech journey. Apple's adaptability, trademark resiliency, and sheer global market heft make it a tempting one to hang on to, even while the headline drama unfolds. That being said, always, do your own research. Dive into the details, keep a keen eye on upcoming developments, and of course, chat with your financial advisor if necessary. That's the beat of the tech investing heart. Watch, learn, and stay informed. Stay savvy, everybody. In a whirlwind of tech happenings today, Apple found itself under the political spotlight amidst tariff threats that could meddle with iPhone pricing. Meanwhile, Dave Inc. emerged as a stock market darling, soaring to new 52-week highs and charming analysts with promising future potential. Meanwhile, TIMB flexed its value muscles, outshining its peers with enticing financial metrics. It's a smorgasbord of market dynamics, from international challenges to investor excitement, leaving everyone eagerly on the edge of their seats to see what tomorrow holds in the ever-shifting landscape of tech stocks. If you enjoyed this roundup, don't forget to hit that like button, subscribe for more tech updates, and share this video with your fellow tech aficionados. Free your calendars for another video tomorrow, and stay tuned for more insights, updates, and financial intrigue. Stay techie.